Good evening, students. Welcome to the class. I hope you have revised the last chapter, and if you have any doubts, you can ask me. Before we move on to today's class for appeal, I would like to discuss certain case laws from the assessment chapter, which we have not discussed in the last lecture. If you have any doubt, you can ask me your doubts. So I'll be discussing certain case laws. Namita, ROI is not required to be filed by RNOR. No, it is required, right? It is not compulsory. Only if his income will exceed the basic exemption limit, then he will be required. So it is not that he is not required to file the ROI. It is nowhere written that he is not required. If he has the income above the basic exemption limit, then he is certainly required to file the ROI. It is nowhere written that he is not required. Okay, let's start with it. So taking up certain cases from your module, the case laws. The first case which I'm discussing is for the National Faceless Assessment Center, which is YCD Industry versus NFAC, a very, very recent judgment. Now, what was the question before the Delhi High Court? The question was that the assessment order, the assessing officer or the NFAC passed the assessment order. But if you remember, we had done that they have to issue a draft assessment order, right? So remember, we had done that under the assessment procedure. They have to issue a draft assessment order, isn't it? So in this case, the NFAC passed the order without issuing the draft assessment order to the assessee. So if you remember, we had done that if there is any variation which is prejudicial to the interest of the assessee, then they have to issue a draft assessment order and give an opportunity of hearing to the assessee, against which the assessee will file a response, right? But here the NFAC failed to do so. Now, whether the final assessment order would be valid without the draft assessment order, that was the question before the Delhi High Court. What did the Delhi High Court hold in this case? It said that 144B requires that the faceless assessment scheme requires the issuance of notice cum draft assessment order. In case there is any variation which is prejudicial to the interest of the assessee, to provide the assessee an opportunity of being heard. That this is what we are proposing to add to your income. So this is something which is mandatorily required under 144B before issuing the final assessment order. The department's contention was that we have already issued notice under section 143(2), 142(1) prior to the passing of assessment order, and therefore even if we did not issue the draft assessment order, it was all right. Delhi High Court rejected such a contention of department. Delhi High Court clearly said that the department cannot set aside the safeguards which are put in place by the legislature. And what is prescribed by the legislature, the procedure which is prescribed, that has to be followed by the department. Is that clear? Is that clear? The second case which I am discussing with you is that it is regarding 154. Now, if you remember, I told you that 154 is required to be issued. 154 rectification has to be done within the 4 years time limit. Now, the question before the Delhi High Court was that whether the 4 years time limit would apply from the date of the original assessment order, or if the assessment order was then made if against the assessment order the appeal was made and the appellate authority's order was passed. Say for example, against the assessment order, now CIT appeal assessee has gone into, and the CIT appeals order is there. So whether 4 years has to be from the date of the original assessment order or the order of the appellate authority. So Delhi High Court said that once an assessee makes the appeal against the assessment order, the order of the assessing officer merges with the order of the appellate authority. And then the original order will cease to exist. And only the order of the appellate authority will prevail. Therefore, the 4 years time frame has to be counted from the date of the order of the appellate authority and not from the date of condition under 139(1) will apply, which is what the individual will be required to file the ITR if he has a total income above the basic exemption limit. If he does not have the total income above the basic exemption limit, then ROI is not required to be filed. For ROR, there is a compulsory condition. Now, why this is there for ROR and not there for RNOR? Because RNOR was there outside India for so many years. That's why he is RNOR, right? RNOR has been outside India for so many years. And suddenly he becomes the resident. That's why we have a condition of RNOR. Because you cannot just fasten him with the global tax liability, global income taxable in India. From the first year itself, he becomes a resident. That's why we have the second category of RNOR, to provide relief to such non-residents who are becoming resident for the first time in India. So therefore, he might be certainly having assets outside India. And you cannot ask him to disclose all his assets because he has become the resident for the first time in India. That is why he is RNOR. So that's why we do not have this compulsory condition that if he has assets outside India, he should compulsorily file ITR. That is not for RNOR. But RNOR, if he will have the income above the basic exemption limit, then he will be certainly required to file the ITR. I hope it clears, Namita. Ankit, international tax classes will be taken up in February by one professor. Okay. So let's proceed further then, if there are no further doubts. So these are the case laws I wanted to discuss with you with respect to the assessment procedure. Is that clear? Any doubt with respect to the case laws? Okay. Now, with respect to the assessment procedure, we have done the case laws, we have done the all the provisions, we have done certain cases also. Just few questions I would like to take it up with you from your module only. Few questions I will take it up with you from your module. So, there's one question that the assessing officer is bound to allow the set-off of brought forward losses under section 72 even if the assessee has not claimed the same in the return filed. So this particular question says that whether this statement is correct or not. So whether the assessing officer is mandatorily required to allow the set-off of brought forward losses even if the assessee is not claimed in the return file. So Supreme Court in a very old decision has held that it is a duty of the AO to apply the provisions of the Act for the purpose of determining the total income of the assessee and the final tax liability. So even if the assessee has not claimed the set-off, the AO is duty bound to give the set-off of the loss by applying section 72. Because it is the job of the AO to compute the total income as per the provisions of the Act. And even if the assessee has not claimed the same, if the assessee is eligible for the relief, the AO is duty bound to give it. Even there is an old CPDT circular which says that it is the duty of the AO to assist a taxpayer in every reasonable way by giving all the relief he is entitled to. So even if the assessee has forgotten to claim the same, the AO should be giving the relief. For this, if you read section 72, it also says that the loss set-off of brought forward losses, business loss, is mandatory. Therefore, the AO is bound to allow the claim for set-off of brought forward business loss, even if the assessee has not claimed the same in the return of income. So therefore, this particular statement is very well correct, and the assessee will be entitled to the set-off of loss. Is that clear? One more question. Say, for example, the assessee now has filed a return and he has forgotten to claim a deduction under ATC. Now, the time limit, say, for revising the return has expired. So what he does is, he goes to the assessing officer and he says that he gives a letter to the assessing officer saying that he has forgotten to claim the deduction under ATC, but kindly allow me the relief. So whether the assessing officer is entitled to allow him the deduction based on the letter received from the assessee for deduction under section ATC. So the Supreme Court, in one of the very landmark case of Boyds, India, very old case again, had ruled that the AO has no power to entertain a claim for deduction made after filing of return of income, otherwise than the revised return of income. So AO is not allowed to entertain any claims based on the letter filed by the assessee. If the assessee wants to claim something, he has to file a revised return. The assessee cannot just make a letter to the AO asking him to give the relief of ATC. That is not possible. So assessing officer is not entitled to entertain any claim without having the assessee revising his return to claim that particular thing. Is that clear? Clear? So a claim can be raised only by filing a revised return of income and not by making a letter to the AO. Is that clear? Clear? Okay. Any other doubt? No, Namita, how, if the assessee has filed ROI after the due date, how will the AO give the 72 benefit? It has to be in accordance with the Act. Only if the assessee is eligible to have the set-off of losses, then the AO can give. But if the assessee has filed the return after the due date, then obviously the AO will not give the relief. Is that clear? So if the assessee is only entitled to it, then only the AO will give. Otherwise, the AO will not give. Clear? Okay. So this is for the assessment proceedings. Now we shall be moving towards the appeals. Appeals and revision. So for the appeals, so if now the assessment order is passed, and if the assessee is aggrieved with the assessment order, he has two options. Either he can file an appeal or he could go for a revision. One other option which we saw was a rectification under 154, right? So rectification under 154 was one more option which the assessee has the power to do so. He can make an application under 154, but only if it is a mistake apparent from the record, right? But for other cases, he could either go for appeals or revision. Now, first appellate level against the assessment order. So let's say if your assessment order is passed, your normal assessment order is there, right? In this case, you can go to the CITA. If the CITA also gives an adverse order, you can go for ITAT. You can go for, if ITAT also gives an adverse order, then High Court, and finally the Supreme Court. But be mindful, ITAT is the final fact-finding authority. So if it's a question of fact, then it cannot go to High Court. But if it's a question of law, it can go to High Court and Supreme Court. Right? That is one alternative. The second alternative, as I said, you can make an application for revision under section 264. You can make an application for revision under section 264. And the third alternative which I gave you was 154, which was the rectification. 154 was your rectification. For rectification, the time limit was 6 months, and only if there is mistake apparent from a record. A mistake apparent from record. And if it was a case of suo motu rectification by the assessing officer, then it's a 4 years time limit which is given. Right? But if you are going for appeal, then this is the route, or if you can go for revision. If it is a case of transfer pricing order, then you have an option of going before dispute resolution panel, which we have dealt with while we were dealing with 144C. If you remember, we have dealt with 144C already. So you can go for the transfer pricing order. If you remember, we had under the assessment procedure that the NFAC shall pass the draft assessment order in case of the eligible assessee. The NFAC will pass the draft assessment order in case of the NFAC. Now, if it is a case of NFAC, then the draft assessment order will be passed and assessee can then submit the order before the DRP. So in case of transfer pricing order, of course, CIT appeal route is also available. It is not that the CIT appeal route is not available, but the better alternative always is to go for DRP under 144C. Isn't it? So now if you go before DRP under section 144C, then in that case, the draft assessment order will be there and not the final assessment order. So if you are going before DRP, it is going to be the draft assessment order and not the final assessment order. So under DRP, the DRP will examine your case and will give the final directions to the AO, based on which the AO will pass the final assessment order on receiving the directions of the DRP. So all of that we have done under section 144C. Correct? Now, for 144C, for the DRP route, what is the time limit? Time limit was within 30 days of the order, you have to make an application to the DRP. Isn't it? So, you have to make the application to the DRP within the 30 days time frame. Correct? So, this is within 30 days of the receipt of the order, the DRP application has to be made. And the DRP will pass the order within 9 months. Correct? And then the AO will pass the final assessment order based on the directions given by the DRP. So, AO has to pass final assessment order based on the directions of the DRP. Right? Based on the directions of the DRP. So AO has to then pass the final assessment order. Now, this order cannot be appealed before the CIT appeal. This order cannot be appealed before CIT. So, the DRP order can then directly be appealed against ITAT before the ITAT. Is that clear? So, the assessment order which is there, which is finally passed based on the directions issued by the DRP, that order will be directly appealable before ITAT and not before CIT. Is that clear? So, assessing officer has to pass the order then within 1 month from the directions of the DRP. Is that clear? And this order cannot be appealed before CIT. Also, department cannot go into appeal against the DRP order. If the AO is, assessee is agreed, he can make an application directly before ITAT. Is that clear? Similarly, if you remember, we had done for the GAR cases. For the GAR cases also under 144BA, right? The approving panel decides. The approving panel decides and gives the direction to the AO for declaring an arrangement as impermissible avoidance arrangement. Right? And then the AO complete the proceedings in accordance with the directions received from the approving panel. So, with respect to that also, the AO passes the order in accordance with directions of approving panel. Now, against this order also, there is no CIT appeal possible because the directions are binding on the assessee, on the commissioner and the assessing officer. Right? So, no appeal against this possible. But you can directly go to ITAT. So, CIT appeal is not possible for that, but you can directly go to ITAT. Is that clear? So normal assessment order, TP order and GAR cases. Namita, question of fact and question of law. There are two kinds of things. Question of law is where there is a question on the legal ground. Say for example, if the ground could be that whether I am allowed for a particular deduction or not, whether I am eligible to claim a relief or not. For example, say depreciation, whether I have correctly claimed the depreciation, or for that matter, whether on a particular asset the depreciation was eligible or not. But question of fact could be that, say for example, there are two companies which have got amalgamated, and based on the peculiar facts of the case, they have taken the exemption. Now, if the question is on the fact that if they have merged in a particular way, that whether they are eligible for deduction or not, it is not a question of law. It is based on the fact that how they are taking up the exemption based on the facts of their case. So that is a question of fact. Question of law is the legal question which comes up before the court, that whether this particular case is eligible for a particular deduction or not. And that, because question of law would be applicable to all the cases, even if the facts of the case would not be similar. So say for example, if it is held that the depreciation is eligible on this particular asset, then in that case it is eligible for all the kind of assessee. But if it's a question of fact, then it is up to tribunal only. Clear? So now coming towards the CIT appeal, coming towards the first one, which is the CIT appeal. Now, which orders can be appealed before the CITA? Which are the orders which can be appealed before CIT? Against the assessment order, now first is the appealable order. Which are the appealable orders before the CITA? The appealable orders. Right? The first is your normal assessment order under section 143(3). So your assessment order passed under 143(3), which is your normal order, except as I said, the order which is passed pursuant to the directions of the DRP, or the order which is passed pursuant to the direction of the approving panel on where the GAR is applicable, or for that matter, even a best judgment assessment under section 144. So even in the case of a best judgment assessment under section 144, that is also not appealable before the CIT. So except DRP order, approving panel order, or 144 best judgment. Correct? Next is your 147 order, the reassessment order. Reassessment under section 147. So as I said here, the normal order is your 143(3) or 147 reassessment. Right? Again, for reassessment, the DRP order, the approving panel order will not be applicable here. Clear? Then, what are the other orders which can be appealed? before the CITA. An intimation of the summary assessment under section 143(1). An intimation under section 143(1) is also appealable. Intimation of a summary assessment under 143(1) is also appealable before CITA. Even the TDS, TCS intimation are also appealable before the CITA. Order passed by JCIT refusing to approve tonnage tax scheme. So if you remember, we had done tonnage tax scheme while we were dealing with assessment of various entities. That time we had seen for certain shipping companies, the tonnage tax scheme is applicable. Do you remember that? So if the Joint Commissioner does not allow the tonnage tax scheme to the shipping company, in that case, you can also appeal before the CITA directly. So that is the another order which is appealable. Next is rectification order under section 154 or 155. So rectification order passed by the assessing officer is also appealable under section before the CITA. So if under the rectification order your income is increased or your refund is reduced, then in that case you can make the application to the so you can file an appeal before the CITA, except in case where the GAR has been done, except in case where the GAR assessment has been initiated. In that case, there is no possibility of CITA appeal, right? Then next order is order made under section 92CD. What is 92CD? It is transfer pricing order. It is transfer pricing order to give effect to advanced pricing agreement. You will learn all of that while we will be dealing with transfer pricing. Next is order under section 163 treating assessee as agent of non-resident. So if the assessee is treated as an agent of non-resident, then it is appealable before CITA. Then what are the other kinds of order? Other kinds of order are order made under section 171 relating to the partition of HUF, order made under section 170 assessing the income of business in the hands of successor, income of the predecessor in the hands of the successor. Order under section, very important, 201 treating assessee in default. So you remember, if the assessee does not deduct TDS, then you are treated as assessee in default. That order can be also appealed before the CITA. 201 or 206C, which is TCS. So if you do not deduct TDS, or if you do not collect TCS, or you deduct or collect but not pay the tax, then it is appealable before the CITA. Refund order under section 237. Then the penalty orders. Penalty orders are also appealable before the CITA. Penalty orders are also appealable before the CITA. For example, when you do not pay the tax, right? When the assessee is in default in making the payment of tax. So then in that case, the penalty which is payable by him, that order can be appealed against before the CITA, or the penalty under section 271A that we shall be dealing while we will be dealing with the penalties chapter. So penalty under 271A for failure to keep, maintain or books of accounts, right? Then penalty under section 271 AAB, which is penalty in the search cases. Penalty under section 272 AA. Penalty under section 272 AA also, which is in respect of that when the penalty is particularly imposed on the assessee for making a default, right? Then in that case also making a default with respect to survey. In that case also the penalty can be imposed and that order can be appealed against. So if say for example the summons were issued to the assessee, right, and he doesn't comply with it, or say for example the with respect to collecting the information under the 133B. With respect to collecting the information, we have done 133B, right? The survey. So if the assessee default with it, if the assessee does not comply with the directions under 133B or it does not cooperate with 133B survey, then that penalty order can also be appealed against, right? So several penalty orders are there which can be appealed against before the CITA. Is that clear? Penalty against TDS, TCS also, that can be appealed before the CITA. Penalty under section 221 that we already discussed, it can be appealed against. The penalty which is there under section 271B, failure to get the books of accounts audited. Penalty under section 271C, which is in respect of failure to deduct TDS, collect TCS, that also we have done it, right? We have done that penalties, right? So all these penalty under D 272 AA, penalty imposed under 275, all these penalties can be appealed against CITA before CITA. Further, if you remember, we have done the grossing up of TDS, right? Under section 195A, right? So if the assessee agrees that if the payer basically agrees that the tax which is there, he will be bearing it under section 195. And later on, he realizes that there was no tax which was required to be deducted on that income because say for example, the income would not have been taxable as per DTL. Then he may appeal to the commissioner for a declaration that no tax was deductible on such income. So grossing up of TDS if no tax was required to be deducted. So this is only in the cases where the assessee or the payer bears the tax. Further, there is also a general order which is mentioned before, which can be appealed before CITA, which is an order against the assessee where the assessee denies his liability to be assessed under this act. Right? Now, there was a case of the High Court in this case. And what was that case? Let's try and understand. The case in this particular question arose before the High Court that, it was a Supreme Court decision. Supreme Court decision in the case of Genpet, India. Now, what was this case? Very recent decision. The assessee had done the buyback. The assessee had done the buyback. Now, if you remember, for the buyback of shares of listed company, we have the taxability under section 115QA. Now, the assessee contended for some reason that he is not liable to pay tax under 115QA. And CITA did not agree with his contention and he passed the adverse order against the assessee. Now, assessee made an appeal before the CITA. But CITA also did not accept the order of the assessment on the ground that this order is not appealable before CITA because this is the liability of additional income tax under 115QA. And this is not specifically mentioned as an appealable order before CITA. So the matter reached before Supreme Court. The question before the Supreme Court was that whether the CITA is available, whether the appeal before CITA is available to the assessee who is not agreeing with its liability under section 115QA in respect of buyback tax. The Supreme Court looked at 260. The Supreme Court looked at 246A, section 246A. And it saw that by reading the provision, it observed that before the CITA, which orders can be appealed. There's a specific mention of intimation under 143(1). There's a specific mention of order under section 143(3). But there is no specific mention of the 115QA order, which is in respect of the buyback tax. Right? So therefore, in that particular situation, what needs to be done? So the Supreme Court observed that there is also a clause which is specifically saying that an appeal can be made against an order where the assessee denies his liability to be assessed under the Act. This clause. Now, this clause is not dependent on having the 143(3) order or having 147 order. Right? Therefore, what needs to be done in that case? Can the assessee go against this particular order, this particular clause to rely that the buyback tax order can be appealed before CITA? Supreme Court observed that what do we understand by the term denies his liability to be assessed? Supreme Court said that the denies his liability to be assessed is a very comprehensive term. And if the assessee is not agreeing that buyback tax is imposable on him, so it denies his liability to be assessed would not only include the dispute concerning the tax payable, but it will also include the question whether the assessee is at the first place liable under the particular section or provision. So denies his liability not only implies that it is just for the purpose of quantification of tax liability, that how much tax is payable, but it also includes whether the assessee is at the first place accessible under a particular provision or not, or whether the assessee is falling under a particular provision or not. Because the department argued that even though the assessee is saying that he is covered by this particular clause, but at the first place, the question is not concerning his liability to be assessed. He's not disputing how much amount is payable. He's disputing that whether it's covered by buyback tax or not. Supreme Court said that this particular term, denies his liability to be assessed, is a very comprehensive term. And it would also include the question whether the company is liable or not. And therefore, this would fall, the assessee's case would fall within this particular clause. Accordingly, the CIT appeal is maintainable before the question of the buyback tax, the applicability of buyback tax is maintainable before the CIT. Is that clear? So, for this, you have to refer this GenPEC decision. Denies his liability to tax, or denies his liability to be assessed, is a comprehensive term. And would include determination or let's write, and would include the question of buyback tax applicability. Clear? Is that clear? Any doubt? Any question or any doubt? Okay. So let's proceed further then. Now, before the CITA, these are the orders which are appealable, right? What is the form of appeal? Form of appeal is Form 35. There is a fees for appeal, which is if the total income as determined by the AO is less than 1 lakh, then 250 is the fee. If it is between 1 to 2 lakh, it is 500. If it is more than 2 lakh, it is 1000. What is the time limit? When do you make an appeal before the CITA? So the order can be appealed within 30 days. The order can be appealed within 30 days of service of notice of demand under section 156. So remember we had done notice of demand, right? Or if it is a case of intimation, then for example 143(1) intimation, or for that matter your TDS intimation, then it is within 30 days from the date on which intimation is served. 30 days from the date on which intimation is served, right? But generally it is 30 days from the date of service of notice of demand under section 156, right? Now understand one thing very carefully. The appeal before the CITA shall be admitted only if the assessee has paid the entire tax which is due on the income disclosed in the ITR. So if the assessee has filed the return of income, the appeal shall be entertained only if the assessee at the time of filing the appeal has paid the tax on the amount of income which is disclosed in the ITR. If no return has been filed by the assessee, and if, say, for example, the assessment has been made on it, then the assessee must be paying at least the amount of advance tax. So the CITA will not entertain the appeal unless the taxes are paid. CITA to admit the appeal only if entire taxes on returned income are paid. But CITA has the power. If, say, for example, the assessee gives some reason, genuine reason, that he is not able to pay the tax, then the CITA, based on good and sufficient reasons, may exempt the assessee from payment of taxes. May exempt the assessee from payment of taxes on good and sufficient reasons. Is that clear? Now, once the CITA takes the appeal, what he will be doing? The CITA will be taking up the hearing. Also, now understand one thing very clearly. The CITA also is going to be faceless. The CITA also is a faceless scheme. Just like we had the National Faceless Assessment Center, similarly we have for the appeal. So it is a faceless scheme. The appeal is conducted in a faceless manner. There is no face-to-face hearing which happens. Of course, there is an opportunity of personal hearing where the assessee requests for that and where the CITA is satisfied. But CITA shall be taking up the faceless manner of submission of the appeal document. Now, the CITA can make the inquiries also. CITA has the power to make the inquiries, or he can direct the assessing officer to make the further inquiries. Is that clear? What are the powers of the CITA during the appeal? What are the powers? Now, understand one thing. The powers of the CITA are coterminous with that of the powers of the assessing officer. So, CITA can do what an AO can do, but he can also do what AO cannot do. Is that clear? So what does it mean? That the powers of the CITA are coterminous with that of the AO. This was held by Supreme Court in Kanpur Coal Syndicate case. Very old decision. What does it mean by that? So CITA can assess the income which have been considered by AO. It can also assess what is not considered by AO. He can consider every aspect of the assessment order. He can consider any matter arising out of the assessment proceeding, notwithstanding that whether such matter was not raised before him by the assessee. He can make the additions what AO had not done it. So he can enhance the assessment also. So CITA has the power to enhance the assessment. So if the AO had not considered certain issues, the CITA is well within the power to enhance the assessment. Is that clear? What are the other powers of the CITA? What are the other powers of the CITA? Now, other powers of the CITA, he can reduce the assessment also. CITA has the power to reduce the assessment. He has the power to enhance the assessment. So these are the powers of the CITA. He can enhance, because even if the AO has not considered something, he has the power to enhance it. He has the power to reduce the assessment also. So he can confirm the assessment. He can enhance. He can reduce. He can altogether annul the assessment, cancel the assessment also. Further, with respect to the penalty order also, he may confirm, enhance or reduce the penalty too. But whenever he is enhancing the penalty or he is enhancing the assessment, he has to give an opportunity of being heard to the assessee. He has to give the opportunity of being heard to the assessee. Now, other power which he has is whether he can take up the additional grounds. So say for example, the appellate. So we are using the term assessee till the assessment stage. Now when the assessee goes before the CITA, he becomes the appellate. He becomes the appellate. When he goes before the appellate authority, he becomes the appellate. So till the time he is before the assessing officer, he is an assessee. But after the assessment stage, he becomes the appellant. Now, when the appellant, say for example, so you have to use these terms very, very precisely in your exam. You cannot write assessee before the CITA. You have to write appellant. So if, say for example, the appellant has not taken any ground at the time of filing the appeal, but later on at the stage of hearing or before making the submissions, the assessee, or sorry, the appellant, my mistake, the appellant may realize that there is a need to take the additional ground. What is the ground of appeal? The specific points against which he is going to argue his matter, or the specific grievances which he has against the assessment order. So whether the CITA can admit such an additional ground. the CITA has the power to admit even the additional ground if he feels that that particular ground was not willfully omitted by the appellant. That particular ground was not willfully omitted by the appellant. In that case, he can take up the additional ground. So CITA can admit the additional ground of appeal. The CITA can admit the additional ground of appeal. Is that clear? Also, with respect to the appeal which is there before the CITA, as I said, the additional ground can be taken up before him. And for that, he can make any inquiries because, as I said, he has the power to do what AO has the power to do. Further, he can do what even AO cannot do. Also, say for example, now the appellant had not produced certain information or documents before the assessing officer. And now the appellant is producing certain additional information or documentary evidence to the CIT appeal. Quite possible. So when the assessment proceedings were going on, the appellant had not disclosed certain documents, but now he's presenting it before the CITA. So ideally, the assessment order which was based was without considering those documents, which now the appellant is presenting for the first time before the CITA. So the question is whether the CITA can admit the additional evidence. Whether the CITA can admit the additional evidence. So, income tax rules provide that the appellant shall be entitled to produce the additional evidence only in certain circumstances. And what are those circumstances? So yes, it is possible to admit the additional evidence by the CITA only if, so it's a conditional power, only if the AO had refused to admit, only if the AO had refused to admit the evidence. So if the AO was bound to admit those evidences, AO had refused that. Where the appellant was prevented by sufficient cause from producing the evidence. So even though AO had called for that evidence, but the appellant could not produce it with a sufficient cause. The appellant was prevented to produce the evidence called by AO due to, say for example, the appellant's books of accounts were, say, not available due to floods in his office, or due to some sufficient reason his books of accounts are not available at the time when the assessing officer called it. So if there's a sufficient cause by which the appellant was prevented from producing the evidence, then in that case the CITA has the power to admit it. right? So where the appellant was prevented by sufficient cause from producing the evidence which was called by the assessing officer, or even if in case the assessing officer did not call for that evidence, but the appellant was not able to produce that evidence at that point in time with a sufficient cause. Where if the assessing officer has passed the assessment order without giving the opportunity to the appellant to bring the additional evidence. So, the AO passed the order without giving opportunity to appellant to produce evidence. So in these cases, the additional evidence can be admitted by the CITA. And the CITA will only admit the additional evidence by recording his reasons in writing for admitting such evidences. So CITA has to record in writing why he's giving the opportunity to assessee to admit his additional evidences. Is that clear? Any doubt till now? Any doubt? Okay. So then if, say for example, all these things are done, the CITA has to pass the order. And what is the time frame for that? It is within 1 year from the end of the financial year in which the appeal is filed. So order of CITA, 1 year from end of financial year in which appeal is filed. Is that clear? 1 year from the end of the financial year in which the appeal is filed. Also, one more thing, understand very clearly. We have just now dealt under the assessment proceedings a case law of Goetz, right? If you remember this, we had done the case law of Goetz India, right? Wherein I told you that the assessee cannot make the additional claim before the CITA without filing the return of income or without the revised return of income. So he cannot make a claim by letter to the AO. But if you understand, the assessee can make that claim before the appellate authority. So as per the Goetz India decision, the additional claim of the assessee can be made before the assessing officer only by filing a revised return. But he can make the claim without filing the revised return before the appellate authority by filing a letter. So the restriction of making the additional claim is not before the CITA. The CITA, as I said, can take up the additional ground. He can also take up the additional claim which was not allowed by the CITA, or if it was not possible to take that claim by not filing the revised return of income. So here the additional claim is possible. . Goods India case not applicable for appeals. It applies for assessment. Clear? So you cannot make a fresh claim by filing a letter before the AO, but you can very well make it before the appellate authority. Is that clear? Any doubt? Namita, CITA can give the exemption for the taxes even in ITR also. So though there is no specific provision, but CITA is empowered to give the exemption for that also. You can also put a stay on the tax payable if there is the sufficient cause. Is that clear? Okay. Now, if the CITA's order is passed and say, for example, it is not favorable, then the assessee can go before the ITAT. Assessee can go before the ITAT. Now, what are the orders appealable before the ITAT? What are the orders which are appealable? Your order of DRP. As I said, the DRP order or the assessment order passed under section 146(3) or 147 pursuant to the directions of DRP. So I will write here assessment order pursuant to DRP directions. Right? Your normal CITA order is very obvious. Then assessment order applying GAR in directions of approving panel. Right? Again, the penalty orders which are there, that are also appealable before the ITAT. The penalty orders passed by CITA are appealable before ITAT. Further, the power of the AO to exclude a tonnage tax company from tonnage tax scheme, where the company has entered into any tax avoidance scheme or abuse of such tonnage tax scheme. That order is not appealable before CITA, but that order can be appealed before ITAT directly. The order of CIT. Understand there's a difference between CIT and CITA. The order of CIT or PCIT refusing or cancelling trust registration. Trust registration under section 12AA or 12AB. Right? So the trust registration can be appealed directly before ITAT, and it is not possible to appeal before CITA. Similarly, in the case of or fund registration under section 1023C. So if, say for example, the PCIT or CIT passes the order refusing approval of a fund or institution for charitable purposes, educational purposes under section 1023C, that also can be directly appealed before the before the ITAT. Is that clear? The order of CIT refusing to grant the approval under section even 80G. is also appealable directly before the ITAT. The order imposing penalty for failure to furnish the information or failure to answer the questions, that also is directly appealable before ITAT. Is that clear? Now, in ITAT, understand there are benches. The ITAT has the benches which takes up these cases. Now, the benches consist of the judicial member and an accountant member. The ITAT has the benches which are formed, and these benches have a judicial member as well as an accountant member. So a bench normally has two members. One is judicial member and one is the accountant member. Now, who is a judicial member? There are certain qualifications. For a judicial member, the qualifications are that he must have been a district judge or additional district judge for 10 years, or he must have been a member of Indian Legal Service for 10 years, or he must be an additional secretary for 2 years, or he could be an advocate for 10 years. For accountant member, the qualification are he could be a chartered accountant also for 25 years of practice. He could be an Indian Revenue Service officer, IRS officer, who must have been Principal Commissioner of Income Tax for at least 2 years. So these are different qualifications for judicial member and accounting member. Also, there is in ITAT a president and a vice president. Now, president is the retired judge of a high court who has served for at least 7 years. Or he could be the vice president of ITAT also. And sometimes there are single member bench also. So it's not necessary that the bench will have 2 members only. The bench can be a single member bench also if the case is for less than rupees 50 lakhs. If the total income is less than rupees 50 lakh, there could be only single member bench also. Also, there could be a special bench. So what happens that whenever the order is being passed by the ITAT, so how is the order being passed? So the order is being passed based on the majority members giving their opinion. Based on the majority members giving their opinion. Now it is possible that the members are not agreeing with each other. Right? It is possible that the members are not agreeable to each other. So then in that case, a special bench is constituted consisting of 3 or more members, wherein one would be judicial and accountant and another 1 member might be there, where the members of the bench are differing on any opinion. Then the case will be decided on majority. However, if the members are equally divided, then they can refer the question to the president of the tribunal for hearing on that point. So if, say for example, there are 2 members only, then it will be the bench is equally divided and both of them are not agreeing with each other. Then they can refer the question to the president. Now, say for example, one bench has given one decision. The other bench has given the other decision. Then in that case, the matter can go to the special bench consisting of 3 or more members. And in case the question goes to the president of the tribunal, if the members of the bench are not agreeing and if they are equally divided. So if there are 3 members, then it will go as per the majority. But if there are only 2 members and both of them are not agreeing, then they will go to the president. Then president will hear it and the case will be decided on the basis of then majority. And if the 2 benches are not giving the same decision, then a special bench is constituted for a particular case which shall hear the particular case and the matter will be decided accordingly. So special bench is constituted only in cases where the benches are not agreeable with each other. Is that clear? So special bench of tribunal is constituted in very, very special cases. Is that clear? Any doubt? Okay, let's proceed then further. Now, the ITATs also, they have the faceless scheme for ITAT also. Also, with respect to the ITAT, when can the appeal be filed before ITAT? When an appeal has to be filed before ITAT. So the time limit for appeal before ITAT is within 60 days. Within 60 days from the date on which the appeal order is communicated to the assessee. 60 days of communication of appeal order. So if the appeal order is being appealed, so ITAT, what it will do is, it will inform the other party. So say for example, the assessee is appealing against the order of CIT. The assessee is appealing before the order of CIT. Or say for example, the AO is appealing against the order of CIT. Then the other party will get the notice that, look, your case is now going into appeal. The other party has to file then memorandum of cross objections. Memorandum of cross objections within 30 days of the receipt of notice. What is memorandum of cross objection? So the other party will also prepare his submissions, that this is what he looks at the case, or the other party will look other party's submission with respect to his point of view with regard to the case, and he will also give his submission. That is called the memorandum of the cross objection. And the appellate tribunal will consider both the parties' submission and will decide the case accordingly. Is that clear? There is also again a fee for filing the appeal before the ITAT. Appeal has to be filed in Form 36. So if the total income is less than 1 lakh, it is 500. If it is between 1 and 2 lakh, it is 1500. If it is more than 2 lakh, it is 1% of the assessed income subject to maximum of 10,000. If there is possibility that the assessing officer has raised the demand, even CITA has raised the demand. Now, the assessee would not be able to pay that demand if the assessee feels that I'm going before ITAT. So, the assessee can make a submission that the demand be stayed. Why demand should be stayed? Because otherwise the interest will start getting levied on the amount if the assessee is not paying that demand. So the assessee obtains the stay of demand. In CITA also, it was possible to obtain stay of demand. Even in ITAT also, the assessee can obtain the stay of demand. The assessee can obtain the stay of demand, and the ITAT has the power to give that. However, understand one thing. ITAT can permit the stay of demand, but there is a condition. And what is that condition? The condition is that the tribunal can grant the stay of demand only up to 180 days plus on payment of 20% of the amount of tax, interest, fee, penalty, whatever. So it can permit stay of demand if appellant pays or deposits 20% of the tax, interest or penalty, and the stay would be only for 180 days. The stay can only be for 180 days. If, say for example, the appeal is not disposed of within the 180 days, so the ITAT can give a stay of 180 days. But say for example, if the appeal is not disposed of within 180 days, then the ITAT can extend the stay. The ITAT can extend that stay also for another 185 days, provided the assessee has made the application and the appellate tribunal is satisfied that the delay in disposing of the appeal is not attributable to the assessee. So a maximum stay but will be of 365 days. Maximum stay of 365 days will be given. This is the additional stay. So 180 days earlier and balance only 185 days can be given, so that the maximum stay is of 365 days only if delay in appeal disposal is not on account of assessee. So say for example, the bench is not functioning, or say for example, the department is taking the adjournments. So if there is delay caused by all those factors, the delay in disposing of the appeal is not attributable to the assessee, then in that case, the maximum period of 365 days of the stay can be allowed. And after 365 days, even if the appeal is not disposed of within 365 days, then the order of stay shall stand vacated. The order of the stay will stand vacated. Is that clear? The ITAT has to pass the order within, so time limit for order is 4 years. The time limit for orders is 4 years from the end of the financial year. 4 years from the end of the financial year in which the appeal is filed. Is that clear? So the time limit for filing the appeal is, time limit for passing the order is 4 years. Clear? Now understand one thing very clearly. Understand one thing very clearly with respect to the stay of demand. With respect to the stay of demand. Now, as I said, the ITAT has the power to stay the demand for 180 days period. There was a Supreme Court decision in the case of Pepsi Foods Limited, which was the case that after 365 days, if still the delay is not because of the assessee, would the stay get vacated automatically? Is that valid? So after 365 days also, if the delay is not because of the assessee, even after 365 days, if the hearing is not taken up, or for that matter, the order is not passed even after 365 days, and where the delay was not because of the assessee, is it valid that the stay order will get vacated automatically? Supreme Court observed that where the appeal filed before ITAT is not disposed of within 365-day period, the order of the stay will get vacated, even if the delay in disposing of the appeal is not attributable to the assessee. So the Act clearly says that even if the delay is not due to the assessee, still after 365 days, if the hearing is not taken up, then, or if the order is not passed, the stay will get vacated, even if the delay is not because of assessee. So the Supreme Court in this case observed that the ITAT has to hear and decide the appeals within a period of 4 years. The ITAT has the power to decide the appeal within the period of 4 years from the financial year in which appeal is filed. So ITAT has a time limit of 4 years. It is only when the stay is granted where the appeal should ideally be disposed of within a 365-day period. If you see, the time limit of 4 years is given, but for stay it is only 365 days. So where there is a stay matter, so ideally the ITAT should be disposing of within a period of 365 days. But if you read for the stay, the Act is very clear that after 365 days, even if the order is not passed, the stay will get vacated, even if the delay is not attributable to the assessee. So even where the revenue or the department is itself responsible for delay in hearing of the appeal, the stay is getting vacated and the assessee will have hardship. So this particular provision is very arbitrary and irrational for the assessee. So what did the Supreme Court said that? The Supreme Court read down this particular clause and say that where the Act provides that even if the delay in disposing of the appeal is not attributable to the assessee. So here stay order, section 254, section 254(2)(a), the third proviso to it says that stay order will get vacated even if after 365 days, even if delay not attributable to appellant. Even if the delay is not attributable to the appellant. Even if the delay in disposing appeal. Right? Supreme Court in Pepsi Food Limited read down this provision. Supreme Court said that the word not, which is appearing over here, this word not, which is appearing over here, has to be read without the word even if, and the word not has to be read down. So the Supreme Court said that these two words, even if and the word not, are to be ignored. What do we mean by this? Then what it will result is, it will become, as per the Supreme Court decision, it will be that the stay will be vacated after 365 days if or only if delay in disposal of appeal is attributable to appellant. Is it clear? So if a question comes in examination, you have to write both these provisions explaining, and then you have to write the Pepsi Food Limited case. Namita, 20% is the condition which is asked so that the assessee do not default in it. So at least 20% has to be deposited. Namita, it is 1 year time limit only for CIT appeal. Namita, the case of the assessee can go to different benches. There are different benches. One bench cannot hear all the cases. So they divide the case between two benches. Also, it is possible one ITAT gives one decision, the other jurisdictional ITAT gives the other decision. So then in that case, they refer a matter to the special bench if that decision is very, very confusing and if it is of very much importance. Clear? Yes, Namita, even if 365 days it is not passed, it can dispose of within 4 years. That's the point. Any other doubt? Any other doubt? Okay. If there is no further doubt, we can just take a small break of 10 minutes and then we get back. Is that clear? Let's get back after 10 minutes. Okay. Any doubts, students? Supreme Court give opposite interpretation in case of stay. Namita, I didn't get your question. Namita, the ITAT also has different benches. One ITAT, for example, it's Mumbai ITAT, they will have several benches. Okay. Let's start then. Now, once we have the ITAT order, right? The question arises, say for example, the ITAT wants to rectify its order. Does it have the power to do so? Can the ITAT rectify its order? So ITAT has the power to rectify any order where there is mistake apparent from record. So ITAT can rectify order if there is mistake apparent from record. So if there is mistake apparent from record, the ITAT can rectify the order. It can do it if the mistake is brought by the assessee or even by the assessing officer, or it can do it suo motu also. Where there is the enhancement of the assessment due to rectification or reduction of refund, then the opportunity of being heard will be given to the assessee. And the rectification will be within 6 months. The rectification timeline is 6 months from the month in which order was passed. 6 months from the end of the month in which the order was passed. Correct? Now, there are several questions against this. And what are the questions? Let's try and understand. The one question is whether the ITAT has the power to review or reappreciate the correctness of its earlier order. We said it can rectify. The Act specifically says that the ITAT can rectify the order. But whether the ITAT has the power to review or reappreciate the correctness of the order order given earlier. That is the question. So, Bombay High Court in Ernest Exports Limited case observed that 254 mentions about the rectification of mistake apparent on record. Nothing beyond. So 254 only tells you that the order can be rectified. Isn't it? It doesn't give you a freedom to rectify in a way whatever is possible. It is not giving you a way to rectify in any manner as you may like it. So it is 254. The Bombay High Court said that it's not a carte blanche for the tribunal to change its view given earlier by substituting a new view. So it cannot review or reappreciate its order. So 254 is not to unsettle the decisions. It cannot reconsider the matter altogether and come to a different conclusion. because this amounts to reappreciation of the correctness of earlier order, which is not what 254 says. So, rectification does not include review or reappreciation of earlier order, as this amounts to reconsidering the entire matter. From the High Court decision. So, rectification is with respect to only for the mistakes apparent from the record. One more decision of Delhi Full Bench. When the question before the Delhi High Court was, can the tribunal exercise the power to recall its order where there is mistake apparent from the record? So, yes, there is a mistake apparent from the record. We are not reviewing the order and giving a new view, but we are thinking that there is a mistake. The order is full of mistake apparent, which was very apparent from the record, which is very obvious mistake, and therefore the order should be recalled. So, can the recall of the order falls within the rectification? So, Delhi High Court observed that the power of rectification is given to the tribunal so that the assessee is not facing any adversarial order, right, by the mistake of the tribunal. So when there is any prejudice which is caused to the assessee from the ITAT's order, which was given with a mistake, error, or omission, then it is the duty of the ITAT to set it right. Now, in this particular case, the ITAT had not considered a particular case. The ITAT had not considered a particular material which was there already on record. The ITAT missed out certain evidence which was on record. And therefore, the ITAT acknowledged that it has done a mistake. And therefore, the High Court held that the tribunal can recall its order if it is satisfied that the prejudice has resulted to the assessee, which is on account of the ITAT's mistake, which is apparent. So, it does not include review or reappreciation of earlier order, but it includes, review includes the recall of order if prejudice is caused to party, if prejudice is caused to the party due to, on account of mistake, error, omission of by ITAT, due to error, mistake, or omission by ITAT, or on account of apparent mistake or error or omission by ITAT. Is that clear? Namita, what is Supreme Court says if delay is due to assessee, then stay order of vacated? After 365 days. Yes, that's correct. So if the delay is due to assessee, then the stay order will get vacated after 365 days. That's correct. So are we clear on this? So rectification of order will not be permissible if there is a review of the order, but the order can be recalled. The order can be recalled. Is that clear? So recall of order is permissible, but there should be the mistake which should be apparent from the record. Is that clear? This is Delhi High Court decision. This is Delhi High Court decision. Is that clear? So if any prejudice is caused to the assessee, then it can be recalled if there was mistake apparent from the record. Clear? Any doubt? Also understand one thing. As I told you that this order has to be within 6 months from the month in which the order was passed. Now, there is one more case with respect to the issue was, this was the Supreme Court decision, and the issue was that can a rectification order be passed beyond 6 months if the rectification application was made by the assessee or by the assessing officer and it was not a suo motu rectification by ITAT. So Supreme Court in that case observed that the time limit of 6 months which is there. So if the ITAT suo motu makes the rectification of its order, then the time limit of 6 months will be applicable. But where the application of rectification is made by either the assessing officer or by the assessee within the period of 6 months, then the ITAT can decide the application even after expiry of 6 months. But the application by the AO or by the assessee has to be within 6 months. So if it is suo motu, then the application, then there is no application. If it is a suo motu case, then the ITAT can rectify its order within a period of 6 months. But if it is an application made by the assessee or by the AO, then the application should be within the period of 6 months. The ITAT can decide about whether the rectification should be there or not even after the expiry of 6 months period. So it is not compulsory by ITAT to decide within 6 months in case the application is made by the AO or by the assessee. Is that clear? Is that clear? Any doubt? Any doubt? Shall we proceed further? Any doubt? Namita, after 365 days, yes, the stay will get vacated if the delay is due to the assessee. If the delay is due to the assessee, then yes, after 365 days, the stay will get vacated. Clear? Okay, let's proceed further then. Now, if the assessee is aggrieved by or the AO is aggrieved by ITAT's order, then the next appeal goes to the High Court. Next appeal goes to the High Court. Now, appeal before High Court is governed by the Civil Procedure Code. Appeal before High Court is governed by the Civil Procedure Code. Now, when the appeal is made to the High Court has to decide that whether there is a substantial question of law, because ITAT is a final fact-finding authority. So the question of fact cannot be taken before the High Court. So the High Court has to satisfy itself that yes, there exists a substantial question of law, and it has to formulate that question. So High Court has to frame the question, that what is the question in a particular case, what is a substantial question of law. Now, what do we mean by substantial question of law? What do we mean by that? When do we say that there is a substantial question of law? So the substantial question of law is not defined anywhere. However, in various decisions, it has been held that where the rights of the parties are affected, where the question is of general public importance, where there are doubts regarding the understanding of a provision, where there are alternative interpretation of a provision, where the issue seems not to be settled by the Supreme Court. All these questions come within the purview of the substantial question of the law. Is that clear? So what do we mean by substantial question of the law? Where there is no clarity with respect to understanding of that provision. Are we clear? Now, there was one important decision of the Supreme Court. So what does the Act says? That the High Court has to understand that whether there is a substantial question of law, and if yes, it has to frame those question of law. Now, in a case, there was one case where the High Court just went by the questions which were posed by the assessee or the appellant. It did not frame its question of law. So High Court just decided on the questions which were put forth by the appellant. It did not frame on its own the substantial question of law. So when the appellant is making the appeal before the High Court, it has to give the submissions. It has to give the application that these are the questions of law according to me. And then the High Court has to look that yes, really there are certain questions of law which are to be decided, and it will frame those questions, that these are the 5 questions which are going to be decided. But in this case, the High Court just went by the appeal put forth by the appellant, and it did not frame the questions on its own. So the Supreme Court observed that there is a distinction between the questions which are put forth by the appellant for admission of appeal and the questions which are framed by the High Court. The appeal has to be heard only on the substantial question of law framed by the High Court. If the High Court has to take a view that whether there is any substantial question of law or not at the first place. If it is of the view that yes, there exists a substantial question of law, it should record a categorical finding saying that these particular questions, yes, give effect to the substantial question of law. If there is no substantial question of law, based on what the appellant is saying, then the High Court should give the order recording categorically that these are not the substantial question of law, and the appeal is disposed of. Appeal is disposed of without even hearing the case, which is called as appeal disposed of in limine. So this was not done. Instead, the High Court just heard based on the appeal, based on the question of law framed by the appellant. which was not correct as per the provisions of the Act. And therefore, the High Court order was not in accordance with the provision of the Act. Is that clear? This was the Supreme Court judgment in CIT versus A Estate, which is again a very recent judgment. Is that clear? So the appeal order, the substantial question of law had to be framed by the High Court. Akshay, yes, you're correct. Assessee cannot file the rectification of order application before ITT after 6 months. Namita, there is this Supreme Court decision regarding that. Is that clear? Now, by when the appeal needs to be filed before the High Court, what is the time limit? What is the time limit for filing the appeal before the High Court? It has to be within 120 days So, substantial question of law to be framed by High Court. Appeal time limit 120 days. 120 days from the date on which the order is received by the parties. 120 days from date of receipt of order. Can there be a delay in filing the appeal? Can the assessee file the appeal after 120 days? So yes, delay can be condoned in filing the appeal. There is a condonation of delay. There is condonation of delay which is possible. So in case of even CITA, the CITA can also condone the delay if he's satisfied that there is a sufficient cause for not filing the appeal within the specified time. So even for CITA, this 30 days which is there, here delay can be condoned with sufficient cause. Even for the CITA, the delay condonation is possible. The condonation of delay is possible. Is that clear? Even with respect to ITAT, the delay can be condoned with sufficient cause. And similarly, even the High Court can condone the delay if there is sufficient cause to that effect. If there is sufficient cause for not filing. So if there is delay in filing the appeal, then it can be condoned by even the ITAT, High Court, or for that matter, even the CIT. Now, there was one decision before the Supreme Court, again a very recent decision in case of Spinnacom, where the delay in filing the appeal was for the delay due to the pursuance of an alternate remedy. Now, what was that alternate remedy? The assessee, what it did was it went for rectification application before the ITAT because it felt that there is a mistake apparent on record. and therefore it did not file the appeal before ICAI. And the 120 days time limit had passed by. Now, the question before the Supreme Court was that if the assessee was pursuing the alternate remedy of going for rectification of ITAT order, can the delay in filing the High Court appeal be condoned on the basis of sufficient cause? So the Supreme Court rejected the assessee's argument that the delay should be condoned. It rejected the assessee's submission that the rectification application was an alternate remedy to filing of the High Court appeal. Because the Supreme Court said that the rectification application which is there is for the rectifying a mistake which is apparent from record, which is very much a narrower scope compared to forming a substantial question of law. So how can you say that filing a rectification application is an alternate remedy to filing the High Court appeal? High Court appeal has to be on the basis of substantial question of law, and rectification of order is for the mistake apparent from record. This is not an alternate remedy. You should have filed the appeal on time. You could have just mentioned, Supreme Court said that to the assessee that you could have just mentioned in the submission before the High Court that the rectification application is pending before ITAT. This is not at all an alternate remedy. How could you even think that it's an alternate remedy? Because this is not clearly. And therefore, the Supreme Court rejected to condone that delay. Is that clear? Supreme Court rejected in condoning that particular delay. Any doubts till now? Yes, we will discuss about that. If there is delay from, that is not the delay from assessee side. If the accounts of the ARCs, then that is not delay on account of assessee, right? Unless he has done some fraud or something. Yes, High Court bench will frame the substantial question of law. Okay. So the application has to be made before the ITAT within 120 days. Is that clear? It has to be within 120 days. And the delay can be condoned. Clear? So now the High Court can hear the matter on the substantial question of law which is formulated by it. It can also hear the matter on any other question of law which is not formulated by it at the time when the appeal was admitted, but later on when it is interpreting a provision, it thinks that there is also some other angle to it. But it has to record the reasons for new substantial question of law on which it is deciding a case. So, substantial question of law which is framed by the High Court plus any other substantial question not formulated right. Is that clear? Is that clear? But it has to do it only after recording the reasons. And the High Court may determine any issue which has been wrongly determined by ITAT, or even if any issue is not determined by ITAT. So if, say for example, ITAT has not decided on a particular provision or a particular question, then High Court has the power to determine that issue also. So it has not to restrict itself only on the questions decided by ITAT. It can take up the questions which even if the ITAT has not decided. Is that clear? And the appeal shall be heard by bench of 2 members or 2 judges of the High Court. So at least 2 judges should be there, and the appeal will be decided based on the majority, and where there is no such majority, then the question will be referred to the other judges of the High Court, and then it will be decided based on the majority of those members. Is that clear? So that is about the High Court appeal. Now, there are certain again issues with respect to this. There are certain issues with respect to this. And what are those issues? Let's try and understand. Now, whether the High Court has the power to review its order to correct a mistake apparent from the record. We saw that ITAT has the power to rectify a mistake apparent from record, but it has no power to review its order where there is altogether a change of opinion. It can recall the order. How about High Court? Whether it can review the order where there is a mistake apparent from the record. So the Supreme Court, in a very recent case of Sunil Vasudeva, has held that the High Court can review its own order. The High Court can review the order if the High Court can review the order if the grounds for review are discovery of new and important matter or evidence. Discovery of new or important matter or evidence, which after the exercise of due diligence was not within the knowledge of the petitioner or could not be produced by him. So discovery of new and important matter or evidence, which after the due diligence could not be discovered by petitioner or could not be produced by him. So if there is new matter which is new ground which is coming up, new evidence which is coming up, new information which is coming up, which could not be produced at that point in time for sufficient reason, or which is discovered later on by the petitioner, in that case, it can be reviewed. Mistake or error apparent from record. Mistake or error apparent from record, or any other sufficient reason. Is that clear? But the review is not possible where review is not possible where it is repetition of old argument. Old and overruled argument. So if, say, for example, some argument was taken up and it was overruled, or it was not considered, for that the review will not be permissible. Or for minor mistakes, which are inconsequential. Minor inconsequential mistake. Is that clear? So the High Court can review its order with respect to rectifying a mistake apparent from record. If there is discovery of new evidence, in those cases, it can rectify the order. Further, the Supreme Court in this case observed that the review proceedings are not same as the original hearing of the case. Review can only be made in these cases where there is discovery of new material or where there is, for that matter, there is discovery of new material or where there is mistake apparent from record. So with these particular discovery of new material or mistake apparent from record, if it causes miscarriage of justice or it undermines the soundness of the order, other than that, the review petition is not maintainable. Review will not mean that the decision will be reheard. It has to be only for the patent error, very glaring error. It cannot be that it is the different opinion altogether. Similar to ITAT only. So in ITAT also, where there was change of opinion, at that point in time, review was not permissible. So only if it is for a patent error. In ITAT also, if you see, we have done that recall of order is permissible if a particular evidence was not considered. Similar is the thing over here in High Court. So where there are, for example, two views possible on a subject, for that the review will not be done. It will mean that you are reappreciating the case. That is not permissible. The error should be apparent on the face of record. It should not be an error which has to be searched in the order or which has to be found out by way of great exercise to be performed. So review petition is applicable only when, say for example, some material has not been considered or if there is a mistake apparent from record. Where there are two views possible, that is not a mistake apparent from record. Is that clear? Plus, if old argument had been or an argument had been overruled while hearing the case, that for that argument it cannot be entertained, review petition. So the High Court has the power to review an earlier order passed. Is that clear? If there is mistake apparent from record. Any doubt? Any doubt? Namita, because he has committed a fraud. Namita, if ITAT decide the case wrongly also, in case if the question of fact, High Court is not bound to take it, because if it is possible also, then Supreme Court has also decided the matter in a way that it is not right? It is quite possible. There are many matters of Supreme Court where the Supreme Court decision is not very correct. So you cannot do anything in that case. If the question of law exists and it has been rejected, then the appeal lies before the Supreme Court. No, Namita, no time limit here prescribed for review. Yes, if there is altogether change of opinion, then you cannot pass the review order. That's correct. That's correct. So in Supreme Court, even in Meghalaya Steel Limited, had held that the High Court has the power to review the order. And that is an inherent power. Is that clear? So if there is any order passed which is where there is an error which is leading to miscarriage of justice or which is not sound with the principles, or to correct the grave errors, the High Court can review its order. Is that clear? Any doubt? Okay. Then the finally appeal lies before the Supreme Court against the High Court order. So appeal can be filed before the Supreme Court, which is the final authority with respect to any case. And as per section 261, you can appeal to the Supreme Court from any judgment of High Court. In a case where the High Court certifies that it is a fit case for appeal to the Supreme Court. Again, the Supreme Court appeal is governed by the Code of Civil Procedure. It is governed by the Code of Civil Procedure. Is that clear? So time limit for filing appeal before CIT is 30 days from the date of notice of demand, service of notice of demand under 156. Before ITAT, it is 60 days from the date of order communicated to the assessee or to the AO. And for High Court, it is 120 days from the date of receipt of appeal order. Is that clear? And these time limits can be extended with respect to the sufficient cause shown. So there is condonation of delay which is possible. Clear? Now, there is a particular provision which is section 158A, which is a provision for avoiding repetitive appeals. So, where an assessee believes that any question of law in respect of his case, now if his case is going on for say AY 1516 before the assessing officer or before the CITA or before even say ITAT, and there is a substantial question of law for say AY 56 which is of the same nature. The substantial question of law is same as that of the question before the tribunal or before the assessing officer. So assessee can claim that the question of law for an assessment year which is pending before the AO or before CITA or ITAT is identical with the question of law arising in his case for another assessment year which is pending before the High Court or Supreme Court. In that case, the assessee can furnish a declaration to the AO that he agrees to apply whatever the decision will come of High Court or Supreme Court in that year case. And the assessee will then not raise this case of AY 1516 again before any appellate authority or before the High Court or before Supreme Court. So assessee can give a declaration to the AO or to the appellate authority that this is a question of law which is pending. Similar question of law is pending in another year, and therefore you can apply whatever the judgment comes. It can be negative, it can be positive. So whatever the judgment comes, you can just apply that judgment. And even if it comes adverse, I will not make an appeal against this order of AY 1516. And the assessing officer or the CIT or ITAT can admit the claim if it is satisfied that the question of law is same in the current order or in the current case and the other AY. Or if it can reject the claim also by passing an order in writing. Where a claim is admitted, the assessing officer or CIT or ITAT can just make an order disposing the present case without waiting for the final decision on the other case. And finally, when the decision of the Supreme Court or High Court in the other case will come, the AO or CIT or ITAT would apply it to the present case and amend the order passed in order to comply with that particular decision. And then the assessee cannot raise this argument before appeal or before the CIT appeal or ITAT or before the High Court or Supreme Court. Is that clear? Even the order admitting or rejecting the claim of the assessee would be final, and such order also cannot be appealed against. So even if the ITAT or CIT or AO accepts the order or rejects the order of the assessee that this is not the same question of law, that order the assessee cannot appeal. Is that clear? Also, similar thing is there when the appeal is by the revenue. Similar thing is there when the appeal is by the revenue. This is the appeal by the assessee, and when there is appeal by the revenue, similar provision is there under 158AA, 158AA. So where any question of law is identical for that particular year for which the assessment or appeal proceeding is going on, with the question of law which is pending before the Supreme Court for any other year, or against the order before the Supreme Court only. So here it is before the Supreme Court only. And in 158A, it was before High Court or Supreme Court. 158A is for High Court or Supreme Court, and 158AA is pending only before the Supreme Court. Then the commissioner or the principal commissioner of income tax will ask the AO to make an application to ITAT within 60 days of the receipt of the CITA order, if say for example the CITA has passed the order. So if it is appeal by revenue, it will start only after CITA, right? AO cannot do it on its own. So if it is only CITA has passed the adverse order and now the appeal will be made before ITAT. So instead of making an appeal before the ITAT, the commissioner can direct the AO to make an application to the ITAT within 60 days of the receipt of CIT order, stating that the similar question is pending before the Supreme Court, and this particular matter which is there where the question of law is similar to that of the matter which is pending before the Supreme Court. In that case, the application can be made to ITAT that the appeal will be made. Appeal will be made based on or when the decision on the question of law becomes final before the Supreme Court, when the Supreme Court will pass the order. So 158AA says that instead of making an appeal at this point in time before ITAT, the AO can make an application to the ITAT that appeal will be filed only when the Supreme Court decision comes. This application can be made only if now the assessee also accepts that this question of law is identical. So only if the assessee gives his acceptance that yes, the question of law in both the years is identical, in that case only this application can be made. In case the assessee does not give the acceptance, then this cannot be filed before ITAT. This application cannot be made before ITAT. And then the AO has to just go for normal appeal only. Now, what if the CITA's order is not in line with the Supreme Court decision? Supreme Court has given some different order only. So, when the order of the CITA is not in line with the Supreme Court decision, say for example, CITA has given the order in favor, that is why department is going in appeal. But CITA has given the adverse order, that is why department is going in appeal, and Supreme Court has given the order in favor of department. Then the AO will go for appeal to the tribunal within 60 days from the date on which the Supreme Court order is communicated to the CITA. In that case, the AO will go and appeal within 60 days from the date on which the Supreme Court has communicated the order to the CITA. Is that clear? Any doubt? Namita, I didn't get your question. If assessee filed application before AO decides case, so why AO amend the order in assessee case as the order is not yet passed? No, as I said, the order has to be passed. The AO will pass the order under 158A without considering or without waiting for the final decision of Supreme Court. And when the Supreme Court or High Court will give the decision, they will amend the order. Is that clear? Namita, High Court can review the order only if it is there to protect the justice, or if there is a mistake apparent from record which is causing the miscarriage of the justice, which is resulting in grave error In those cases, it can be reviewed. Clear? So this is all about the appeal proceedings. Now we will go towards the revision of order. So I told you that we have two options. One, we can go for appeal mechanism. The other is the revision option. Now revision can be by the CIT also if there is order prejudicial to revenue, and revision petition can also be on the application of the assessee. So first revision is revision under section 263. Revision under section 263, if it is, this is for order prejudicial to revenue. Order prejudicial to revenue. So if PCCIT, so if you know these are the higher authorities, or CCIT, or PCIT or CIT, if they consider that the AO's order is erroneous and prejudicial to the interest of revenue. If the order of the AO is prejudicial, erroneous, and insofar as it is prejudicial to the interest of the revenue, the PCIT, after giving the opportunity of being heard to the assessee and after making an inquiry, will pass the order enhancing or modifying or cancelling the assessment of the AO. So, if the PCIT or CCIT or PCIT or CIT finds that the AO's order is erroneous because it is prejudicial to the interest of the revenue, then in that case, it will give opportunity of being heard to assessee, plus it will make inquiries, and after that it will pass the order, and it can pass the order enhancing assessment or modifying it, or for that matter it can cancel the assessment and direct fresh assessment. It can cancel and direct the fresh assessment. Is that clear? Now, when it will be deemed to be that the order is erroneous, if order is passed, if the order is passed without inquiries or verification by AO, or verification by AO. If the order is passed allowing any relief without inquiring into claim. So say for example, assessee has claimed any deduction and the AO has not verified it. AO has not examined the claim. Order passed without considering the CBDT directions. Without considering CBDT directions. So order passed without considering CBDT order, instruction or direction. Order passed the order passed without considering the High Court or Supreme Court decision, without considering High Court or Supreme Court decision, which are against the assessee. So not the favorable decision, because why would PCIT say that it is erroneous order for the revenue or prejudicial to revenue? If there is order against the assessee of High Court or Supreme Court, that order is not considered by the AO. So the PCIT or CIT, if there are such errors in the order, he can direct the AO to either cancel the assessment. He will either cancel the assessment and direct the AO to make a fresh assessment, or he can enhance or modify the assessment. But he will give the opportunity of being heard to the assessee, and he will also make the necessary inquiries. Is that clear? If say for example, there is this assessment order of the AO. Now the assessee has gone into CIT appeal. So now there were 2 or say 3 issues, A, B, C, but assessee has gone for issue only A and B. The assessee is not pressing issue C before CIT. So revision under section 263 is possible only for issue C. It is not possible for these issues. It is not possible for these issues. So revision petition is only possible for issue C. So where the order under 263 is subject matter of any appeal, then under section 263, it can only be, revision petition can be done only in respect of issue which is not subject matter of appeal. So this is doctrine of partial merger. So if you remember, for 154 also we had doctrine of partial merger. And what is the time limit for revision? Revision order will have to be made. Time limit for revision order 2 years. 2 years from the end of the financial year in which order was passed. 2 years from the end of the financial year in which the order was passed. Is that clear? So that is about 263. That is about 263. Is that clear? Again, revision also is into now a faceless manner. The revision also is in a faceless manner. Clear? Further, now again there are certain issues with respect to the faceless revision. With respect to the revision. And what are these issues? Let's try and understand. Now, there was a question before the Bombay High Court. There was a question before the Bombay High Court that can the commissioner invoke the revisionary jurisdiction under section 263 when the subject matter of revision has been decided by CITA and now the same is pending before the ITAT. So as I told you, Bombay High Court said that when the order of the first appellate authority, when the order of the CITA is complete and now is pending before the ITAT, the commissioner is not entitled to invoke section 263 for very same matter which is decided by CITA and now is pending before ITAT. So order of the AO gets merged with the order of CITA and that cannot be revised. Yes, if there is any issue which is not pressed before ITAT or CITA, that issue can be taken up for revision. That issue very well can be taken up for the revision application. Is that clear? Is that clear? Any doubts till now? Yes, Namita, he has to deposit. Namita, CITA will not file the appeal. It is the AO which files the appeal against the decision of CITA if the Supreme Court decision is given in the favor of the department. Because if it is given in the favor of department and CITA had given the decision in favor of the assessee, then AO will file the appeal before ITAT against the decision of CITA. No, Namita, you're not understanding correctly. 158AA is not CITA's power of appeal. CITA cannot ever appeal. It is the AO. So, Namita, understand. If, say, for example, CITA has given the decision in favor of the assessee, now AO, instead of going appeal at this moment, immediately after the CITA passes the order, what it will do is, it will make an application to the ITAT that we will wait till the Supreme Court decision is passed. Because if the Supreme Court decision is passed in the favor of assessee, then there is no point of going into appeal. But if the Supreme Court decision is passed in the favor of department, then we will go into the appeal at the time when the Supreme Court order is received with us. So 158AA is with regard to delaying the ITAT appeal when the Supreme Court order is passed. If the Supreme Court order is passed in favor of assessee, then there is no point of going into appeal, because now that particular question is decided by Supreme Court. So if it is passed in favor of department, then AO will go into the appeal against the order of CITA, because CITA had decided in favor of assessee. If order is in favor of revenue, then why 263 will be invoked? If it is against the interest of revenue only, then 263 will be issued, Namita. Is that clear? Any other doubt? Any other doubt? Okay. Now, with respect to 264, 264 is in relation to the revision for the purpose of the assessee. So 264 is in relation to is in the favor of the assessee when the order when the order is adverse to the assessee. So in cases where there is the adverse decision against the assessee of the AO. So PCIT, PCCIT or CCIT or CIT is empowered to revise an order passed by the AO where no appeal has been filed. So assessee has the option to go for revision under 264, or it can go for appeal before the CIT. And here the time limit is 1 year. Time limit of application is 1 year for filing the application. And time limit for order is also again 1 year. Time limit for order is 1 year from the financial year in which application is filed. Is that clear? Is that clear? So assessee can go for revision under section 264, or it can go for appeal. But revision cannot be taken up where revision cannot be taken up, where the order is subject matter of appeal. So even if, say for example, this is the assessment order, so assessee decides to go for issue A and B before CIT appeal and for issue C before CIT under section 264 for revision. This C also will not be considered because here it is doctrine of total merger. Here the doctrine of total merger will apply. Is that clear? Doctrine of total merger will be applicable. Clear? Last one thing in this particular chapter is the monetary limit for filing of appeal. So, for filing of appeal by the department. Now, monetary limits are applicable for filing of appeal by the department before ITAT, High Court and Supreme Court. So, where the department goes in appeal before the ITAT, High Court or Supreme Court, then there are certain limits. So, what are these monetary limits? This is with respect to the for tax effect. I'll tell you what is tax effect. For ITAT, the monetary limits are where the tax effect is above 50 lakhs. In case of High Court, it is 1 CR. And in case of Supreme Court, it is 2 CR. So only if the tax effect exceed this monetary limit, only then you can make and the department, this is not for assessee, this is for the department appeal. The department can appeal before the ITAT, High Court or Supreme Court. What is the reason for putting these monetary limits? Because department have an habit to make the appeal even for petty cases. That is why there are so many cases piled up before ITAT, High Court or Supreme Court. To reduce the pile-up of cases, these monetary limits have been introduced so that the department does not appeal in every petty case. This is not for assessee but only for department. And what is tax effect? Tax effect is the tax on the total income, which is as per the assessment order, minus the tax on the income which was returned by the assessee. So tax on the total income which is assessed by the department minus the tax on the income without considering the disputed issues income, without considering the disputed income. So tax on total income is the total income assessed minus without considering the tax on the disputed income. And the tax does not include the interest, where the interest also is in dispute. In case of interest, the tax effect is the amount of interest. In case of penalty, the tax effect is the quantum of penalty which is disputed. Is that clear? Where there is a loss, then the tax effect would be notional tax on the disputed additions. Is that clear? And these tax effects will be for different assessment year. So the AO has to calculate the tax effect separately for every assessment year in respect of the disputed issue. Is that clear? If there is same issue which is in different years, then the appeal can be filed in respect of all those assessment year in which the tax effect in respect of disputed issue exceeds the specified monetary limit in together of all these cases. And no appeal shall be filed in respect of any assessment year in which the tax effect is less than the monetary limit. Is that clear? So tax effect is for each assessment year. Further, it is not the case that if, say for example, for AY 15-16, the tax effect was less than 50 lakhs before ITAT. So then for AY 18-19, say for example, if the tax effect is more now, will it be considered that department has accepted the order of CITA? Or will it be considered that the department has agreed with the order which is in favor of assessee if the tax effect was less for earlier years? Answer is no. So the department is not precluded from filing an appeal in the subsequent assessment years if the tax effect exceed in those years. So there will be no presumption that the department has agreed to the decision of the authority if the tax effect was lower. The department can go for 1819 if the tax effect is higher. Is that clear? So if, say for example, the tax effect was lower, it will not be considered that this particular decision department has accepted, or it will not set any precedent value for the department side. Is that clear? Clear? So it will not be the case that now the assessee in the later year can argue, look, the tax effect was low and the department has accepted that decision, and therefore this year also the same particular decision should hold good. It is not the case. The department can say that we have not appealed because it was less than the monetary limit. It will not set any precedent. There are exceptions to this. So even if the tax effect is lower, certain decisions can be contested. So this will not be applicable where there is challenge to the constitutional validity of a case, where there is challenge to the constitutional validity of a particular provision, where CBDT circular or notification or instruction is ultra virus or illegal, where the addition is relating to the undisclosed foreign income, addition in relation to undisclosed foreign income or undisclosed foreign assets or foreign bank account, where the revenue audit objection has been accepted by department, where the addition is based on information from external agencies like CBI, where the prosecution has been filed by department. So in these cases, even where the tax effect is lower, still the case can be filed. It can also be filed for writ petitions. It can also be there for writ petitions. Is that clear? Or other direct tax matters. Say for example, for cancellation of registration of trust, for registration of trust or institution. For them, the monetary limits will not be applicable. Is that clear? Is that clear? Further, it will also not be applicable in relation to LTCG or STCG in case of bogus claims in penny stocks. So bogus LTCG or STCG. So what are penny stocks? Penny stocks are nothing but the stocks which are purchased at a very nominal value and sold at a very high price. So these are the companies which are just operating only for circulating the black money. So for LTCG or STCG, through penny stocks, for that also, even if the tax effect is lower, still the appeal will be permissible. Is that clear? Any doubt? Namita, doctrine of partial merger is that if, say, for example, the assessment order has, say, 3 issues. Say, for example, one is with respect to depreciation disallowance. Second is in respect to, say, GST disallowance. Third is, say, in respect of interest disallowance. Now, for depreciation and GST, I'm going before CITA. For interest disallowance, can revision under section 263 or say, for example, there's rectification under section 154 be admitted? The answer is yes. Revision under section 263 is possible for interest disallowance if the CID is of the opinion that the interest disallowance is erroneous, is without making any inquiries, and it is prejudicial to the interest of revenue. There should have been higher disallowance. If the CID feels that there should have been higher disallowance, then he can make a revision under section 263, but he cannot make the revision for these 2 orders. Similarly, I can file the rectification, the assessee can file the rectification under section 154 with respect to interest disallowance. It cannot file with respect to these 2. So that is doctrine of partial merger. So for which the appeal is pending before CITA, I cannot file the revision under 154, revision under 263 or rectification under section 154. But here, revision under section 264 will not be possible because this is doctrine of total merger. Clear? Namita, if the tax effect is low, appeal cannot be filed. And if new evidence is got by department, then it is not a case of appeal. Penny stocks, yes, they can be listed also. Namita, the tax effect will be the tax on the income only. Yes, after 2 years, it cannot be revised. Is that clear? So what we'll be doing in the next class is we'll be taking up certain questions as we did it for assessment today. So I would suggest you to revise everything and come for the next class. So thank you so much. See you in the next class.